Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. I do the show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. Available to you anytime, anywhere. It's under the channel L.A. Little. You can get it on any device, subscribe to it, and have it pushed to you. Folks, one of the things that sometimes happens in the markets is they get very choppy, they get very volatile, and usually those things happen at inflection points. We kind of talked about this last week. We're definitely at that point again. Yesterday, huge day up. Today, right back the other way. Takeaway of a takeaway. 335 points down on the Dow, almost 2%. Russell led the way one more time, 2.66. 2% on the S&Ps, 2% on the NASDAQ composite, almost 2%, 1.75, 1.75 on the NDX. Gold was up slightly, copper up slightly, but pretty much everything got whacked. Dollar was up a bit. Big reversals here. Last night we had the reversal at the lows, and I believe I said it left volume at the lows, and it was a slight negative because that volume looked to be to the upside. Well, today they came right back at it and took it back the other way. That's not a good thing, and it is especially not a good thing when you're in a situation like we are in this particular market, where it's already struggling. It's struggling to hold these lows. We'd already talked about the potential for some sort of an ABCD structure to the downside. And we were looking in particular, a small one that could get us down into this area here. And it's got a good shot at it again, because here we are right there at the lows again, volume pretty heavy still. It was an inside bar today, and that's going to be true on a lot of these, although some of the sectors actually closed lower and the Dow closed lower. But the rest of these were inside bars, just huge volatility inside this area. And when you look at this, this is 3 days of huge ranges. And if you look at the last 7 days, 6 of the 7 have had huge ranges. These are not normal sized bars. This kind of volatility, it's going to do a couple things. One is it's going to create a lot of pressure whichever way this thing breaks. So when this breaks to the upside or the downside and holds it, in other words, we don't come down here and then we go right back inside, then that's going to set up a larger move to the downside or a larger move to the upside. Why? Because this has become a major inflection point. And it comes at the end of a very long move, and a lot of times those are reversals. Now, in neoclassical thought, we're always looking at what the market should do based on what it just did. And we're using that knowledge to gauge what to expect next. So coming into the day, I did not expect what I see on these charts. I did not expect to see a takeaway of a takeaway. Although that's not uncommon anymore. We've seen it once before already, but it's not what you would expect. Because yesterday you actually tested lows. You did test them on heavier volume, though. That was a notation we made. Although we kind of dismissed it, in that it would probably come back at some point, but not immediately. Reversed, closed all the way back up towards that breakdown bar right at the top of it, right? And looked poised to try to take it out. And then you get a day like today where you just completely go the opposite way. So it doesn't do what you expect. If the market doesn't do what it should do, and this is assuming we're reading the tea leaves correctly, then that's telling you it's a lot more negative, in this case negative, than you think it is. And that's on a larger scale. So when I look at this and I see this kind of action, that just makes me think, okay, even though we may not break right away, there's going to be a lot of pressure to the downside still going forward. And as you know, we're coming into earnings season. And if we look at some of those stocks that reported last night, Alcoa, remember they were up 3% after the bell, and I said it really didn't do anything for them? Well, here they are back the other way, you know, big volume decline. Monsanto, remember Monsanto was up a bit. You know, it was up 3% during the day. It was, you know, reported yesterday morning. It goes over back under less volume. This thing fails, right? It wants to go lower. What was it? ACWR, I believe, was another one, or AWCR. A lot of these simply aren't doing what you would expect, and that's a problem. In other words, the earnings are being sold so far, not bought, and they certainly look like they were going to be bought last night. Dow Jones, as I said, closes underneath, a little bit less volume, but it closes under it. So again, takeaway of a takeaway, a lower close. That one wants to go lower from what it's telling us. If I look at the what is this, the NASDAQ composite. Now these were all inside bars again, less volume, but they're down there to test the lows again. Same with the NDX. And the Russell is the only index that's been telling us a story without its fingers behind its back crossed. Right? It's the only one that keeps telling us the same thing and doing what it says. And it's been saying, I'm going to go lower, and it continues to act that way and continues to trade that way. It's the only index that's given us good reads and continues to give us good reads. And the read here, tomorrow's Friday, is that if we hold at these price points tomorrow and we do not bounce, the Russell is going to break all these swing points tomorrow. And that's going to take it and turn it negative. And it's going to be the only index to go negative since 2008, I believe. I'll have to check that, but I believe that's true. I don't think any of them went negative since the debacle. Now, since it's only one, it's not the end of the world. But one leads to two, two leads to three. You know, pretty soon they're all going that way. So it's certainly something we have to keep watching. And it's the only index that keeps doing what it suggests it's going to do, and that is trade lower. Remember last week it broke. You can see the arrow here. It broke. That says 2 to 3 bars follow through. If it breaks again, that says 2 to 3 bars follow through. So in other words, you can tack on another couple 3 bars. And the fact that it does it twice in a row says next week's going to be really tough. So unless this thing finds a way to jump, you know, percent and a half, whatever it takes here, this is an ugly situation, and it's not forecasting good things. It's forecasting bad. The other thing that's a problem is the sectors, and I want to take a moment just to show you the kind of damage that's starting to be done on some of these sectors. And this kind of action is not what you see in a healthy market. And we haven't had a healthy market for a while now. It's just that it's finally starting to materialize in all the indexes, not just one. This is the XLE. You know, we've been watching these volumes expand and saying, okay, that could be the blowout. No, it hangs, goes again, right? Now that one could be the blowout. No, can't lift, right? Remember it failed twice? Now what does it do? We get one yesterday that looked like it might be the blowout. We saw it left volume though. What do we do today? We do it even more volume. Right? At the same time, of course, oil is plummeting. Let's take a quick look at the proxy there. This one's plummeting. Remember, gap down yesterday, more so today. volume not expanding huge here. This can go farther. But going back to the XLE and looking at it on the weekly, folks, the XLE is coming into the lows of February, which also happened to be the lows of October last year. The highs of the lows, February 3rd, 84.17. Where are we at? 84.74. We're going to hit them, and we're coming into them with more volume. It acts as if it's going to get it all the way to the bottom of these. That's ugly. And that's the sort of damage, the destruction that can take place. And you can see 5 weeks straight. You know, once it breaks, goes bearish, a lot of bad things can happen. And that's what it's doing. And that's the sort of thing you have to guard against. So in summary, you know, we've come down a lot, we've thrashed a lot, we've had huge swings back and forth. We may finally see a quiet day tomorrow. I wouldn't count on it, but I don't expect 40 points on the S&P again tomorrow. But we are in a danger zone. The bearish case continues to grow. I wrote a piece on that in Market Watch. You can take a look at it here. You know, I kind of laid out the whole argument. I wrote this this printed yesterday morning, and it was kind of funny because a couple people commented on Market Watch and said, "Well, you probably wish you held that one a day early, right? Because of the huge bounce yesterday, right?" And then today, one of them came back and said, "Well, maybe I spoke too soon," you know, because I had suggested that, you know, we were probably going to get a test of the lows yesterday, you know, and then some sort of a bounce, you know, test the lows, scare people, bounce it, and then eventually roll over and fail. If so, then that was going to be the larger move down. Now, honestly, I didn't think it was going to be today. I didn't think we were going to get an immediate move. As a matter of fact, I would have rather seen it go up a little bit more before it rolled over if, in fact, this is the rollover. But the point is, market's in trouble. It's in an inflection point. If these earnings do not bail it out, this thing's going down. It's going down hard. So, you know, it's just beware. You know, if you're not positioned correctly, you can get hurt. I don't think this is a crash situation, but I do think it can certainly go down a significant amount. And if it does, there's a lot of people not going to believe it, right? Because nobody ever believes it. When you get to the top, nobody ever believes it ever goes down. That's the way it always feels, right? You watch your neighbors buy new cars because they're making so much money. You want to do the same thing. Everybody wants to do the same thing. Margin debt's the highest it's been. You know, the IPOs keep coming. The earnings aren't that great. They keep manufacturing. The Fed keeps pumping out money. I mean, you can go down the list of all these things that look wrong. But again, it never matters until it matters. And, you know, we're close. Let me look at the sectors here because I wanted to show you. So that was the XLE. XLE is the only one, you know, in this kind of damage zone. And it looks like it's going all the way back to these lows. As a matter of fact, those lows you see there, if you pull over the monthly, this would be the first one to break on the monthly if it does. That low you see is here. 81.78. And these numbers, I believe, are right down there. Yep, those are the numbers. So if this gets down to here, I do expect it will bounce initially. But if it comes back again and blows them out, folks, that's a bearish trend on a monthly chart. That's as bad as it gets. And again, as I always tell you, 2 or 3 indexes start to do the same thing. Almost all of them are going there. And if you haven't heard my speech before about 2007, 2008, and there's a link in that article if you want to go back to it and read it. There's a couple of links that get you back to it. In 2007, 2008, 2007 was the top. It took a year to get the crash. A full year. You know, 2007 was the top in September. 2008, of course, is when we started to crumble in September through October. In November, you know, on until February next year. It takes time to build out these structures. They don't happen overnight. Even here, you know, you're always looking for the one, you know, one or two that tell you something's wrong. Well, this one's telling you something's wrong. The Russell's telling you something's wrong. It doesn't mean it has to crash. And at this point, I don't know that it will. But when you see an approaching rainstorm, you need to get a raincoat. And if the storm really starts to pour, well, maybe you get the umbrella and some rubber boots. And if the water starts to rise, you get a life preserver. It's the same thing in the stock market. You don't sit there and watch the water go over your head and don't do anything. You have to do something. Let's look at these sectors because I want to show a few other things to you as we go along here. So I'm going to pull out the daily chart, and we're not going to look at it. I want to show you the weeklies. 2 swing point lows. This is on the transportation. You're coming after them. The SOX, same thing, coming after the lows. Right? The lows are here. You don't quite have the volume yet, but you're coming after them. Tomorrow's Friday, folks. If this thing starts to crumble tomorrow, it takes them all out. XLB, already under this one, under that one. At this point, if it holds down here, which it looks like it will, it's going to turn bearish. That's on the weekly. XLB on the monthly, it's got a ways to go to get back to anything because remember, these things all had huge runs. They can come back a long way before they get to the swing point lows on most charts, on the monthlies. And that's why I say it's going to take a while. If this is the end, it's going to take a while for it to all happen. XLF, they're still holding up in pretty good shape here. Nothing damaging there yet. Although, if you look at it on the daily, this thing's ready to break on the daily. Volume expands hugely today. XLI is ready to break on the weekly. Right? It's coming after 2 swing point lows. It's sitting on one now, and it's got the volume. It's coming after the other one as well. Turn it bearish. Now, the XLK held today, just like the XLF. Not quite as bad. Volume expands terrifically. Not so bad here on the weekly yet. XLP, XLU, money been coming to those, so they're certainly not in trouble. XLV, still looking okay on the weekly, but you can see here, volume expanding tremendously today. And then finally, XLY is coming after swing point lows. So if you count those up, right, you've already got the XLE has broken everything, and you got 5 more ready to break on the monthly time frame, excuse me, the weekly time frame. And so if I come over here and look at the trends, what you're going to see here is you're going to see all of these ready to start rolling over to sideways, and in some case bearish. That almost guarantees you these are going there. It's just a matter of time. Okay, so beware of that. All right, I had a question on actually a stock that I mentioned last night. I was talking about earnings last night, and I brought up the Ozark, which is a banking concern in Southeast. And it looks like their date isn't what it looked like to be. I think it's the 14th, so it's next week. So they did not report earnings yet. Here's the weekly chart. It's underneath the swing point low on the weekly. So the question was on the weekly, where's the buy? You can see the nice volume spikes in this. I like this stock, but it's building out a big range here. So, you know, in my opinion, you know, with the market doing what it's doing, you just got to let it build out the range still. You got the higher range somewhere up in here, the lower range somewhere down in there. You're in the lower range. You want to kind of wait, right? Especially with it under the swing point low now. It's going to try to make it back down probably into this area, which is where the TA Today charts show you support is and where you should be looking. So I would certainly let it come back that deep and see what it wants to do when it gets there. The big test is the test over here. That's on the, 27th of January. So big, strong stock. It's just sitting there and not really doing anything yet. It's had a huge run. That's why, of course, I liked it. Clean this up for you. Huge run. So a consolidation up here, pullback, whatever you want to call it, you know, it's the sort of thing it needs to do after this big run. A lot of these stocks that make these kinds of moves, you know, you just got to be really patient and let them play out. You know, if they want to consolidate for a year, year and a half, 2 years, that's fine. There's no sense that you buy them there. You just keep them on your list. Watch them. At some point, they're gonna, you know, set up correctly, and you can, you know, take your shot at them. So that's Ozark. There was another question again about the GDX, and we talked about the GDX, I think last night, and I said you needed to let it come in. I didn't look at it today. Let's take a look at it together, because you wanted to let it come back into that. Yeah, and it did today. Matter of fact, it came right to it. So it got up underneath it, but it closed right at that level I was talking about last night. So the question was, on a short-term basis, is this a buy? Well, it's right at that price point that I suggested that you think about buying it. Didn't have the volume. It's an inside day. Yeah, I think it's not a bad spot. You know, this area right here is the area that I would be looking. If you can get it in that little spot, that's even better, right? And then you put your stop just up underneath this big bar. Now, the thing I don't like about it is there's a lot of volume at the bottom, and usually those things get tested. So the ideal case would be this thing goes underneath there. If you're patient enough to let this play out for a couple weeks, and I'm guessing it's going to take a couple weeks to get there, you know, and it does something up here, and then eventually comes back down here and tests again and has no volume, right? It goes under, back over. That's the ideal buy, because then it's told you there are no sellers. Right now, you don't know that. This is a trade, if anything. If you're doing something with this now, you better be thinking trade. In other words, I'm bounce trading this thing. When you get a thing like I was just talking about, and eventually it comes down, goes back over, has no volume, that can be more of an investment idea, right? That's something you can stick with for 2 or 3, 4 months potentially. Of course, the ideal case is that it does that, comes back in, and then it shoots up and volume expands tremendously. What does that tell you? That tells you institutions coming into this thing, right, buying it up. Now, they could be wrong, just like you and I, but at the same time, they got a heck of a lot more money than you and I, and they can move it. And so you'd like to see those guys come in to confirm that you've got a bottom and that they think it's cheap enough finally. Right now, you don't know that. So if you're playing with this, you got to play with it with no volume. And as I look at this, I was just glancing over here at the monthly. Volume's huge on the monthly here too, so that also is a negative. So if you're trading this, just trade it, folks. Don't try to buy this thing and hold it. It's just too soon for that. Okay. All right. What do I want to do here? I got a few minutes. Let me think. I didn't have anything else prepared. I actually thought it would take longer to go through what I wanted to. Let me take a quick look at the ox markets, because I haven't looked at them today. And what I want to do is, we were just talking about gold. Let's take a look at the gold market. I believe it was kind of a doji today. Yeah, kind of a weak doji. That one's going to try to pull back in some. So let me see what the dollar's doing, because the dollar was up a little bit, we saw. All right, so the dollar, 22.66. Dollar tested the lows, less volume. The dollar is going to bounce. That's going to put pressure back on gold. This has a high volume high, but it came off with a lot of volume as well. Wow, this is probably going to climb almost to 23 again. And that's going to put a bunch of pressure on gold again. So on that GDX trade, I would probably let it test that low, because you're probably going to get that low tested. And that may set up the buy finally. Let's see what the bonds did. Bonds failed. This is interesting. So 8.5, they didn't look like they were going to have the volume. So the bonds go over the highs, back underneath, but they got more volume. A test failure, but more volume. What does that tell you? It tells you it's going to go do it again. It's not done. It could do it as soon as tomorrow, or it could get the pull back into the support zone and then do it from there. And if you look at the bonds, right, you've got this bar here with all the volume on it sitting right at where? The bottom of the support zone. You know, if it comes back into here and the volume dries up, which is likely, then this thing's going to set up another ABCD structure and go back the other way again. So you'd have this sort of an ABC to take it up to new highs again. Bonds are not going to go anywhere, folks. If you think about it, I mean, the bond yields here are great compared to anywhere else in the world. I mean, you got better yields here than you do in Spain, of all places. Well, it's not better, but almost equivalent. And you know, do you think the debt in Spain is better than the U.S. debt? I mean, neither one of them are great, but I don't think there's a comparison. So bonds, you know, and you got a dollar that's strong. That also, you know, if I'm a foreigner, makes sense to buy. Let me see what the corporate bonds are doing. So the high quality ones got a nice big run up. That makes sense when the market did. Although it went a little bit farther than I expected. Oh my, look at this. The junk bonds. I wonder if this was a yield thing today. Let me see. Because they do their distributions. Let me see on a different chart that actually doesn't. No, it was real. So that's ugly. So junk bonds are going to try to give it up. Where's my other chart? Where's my weekly? Yeah, they are. And there's nothing underneath them. And this is going to break again. Okay, so just another warning sign. Just another warning sign out there. You got them all over the place. Okay, I'm going to leave it at that. It's Thursday. You know, tomorrow's Friday. You got you know, a couple little news items, retail sales, some sentiment numbers, nothing big. You know, the big thing is going to be all the earnings that start hitting next week, and this market's going to have to find itself on those earnings, or it's going to be a tough week. And the Russell's already telling us it's probably going to be a tough week unless we see a big bounce tomorrow. So let's see what it gives us. At this point, you know, the fact that it can't do what it should do tells me to be careful. Hopefully it's telling you the same thing. Have a great night and a great weekend. I'll see you next time. Take care, folks. Good night.